Hey, let's backtest together because I've been in a tricky situation whereby I've been taking various losses, consecutive losses, and I think there's something I need to tweak, and there's something I need to clarify, and in this, that's what I'm trying to maybe backtest and see what the market is will be actually doing for this period and where I can get things right. So I will start with this period of time. So at these I want as of Monday the market to have played until Monday there, so that we can start from the weekly time frame. Will be a quick one. I don't want this to be that long, right? All right, there we go. This is the weekly chart as of the weekly as of this period we want to backtest, and what we are seeing is the market looks kind of to be in arranging conditions. And how can we actually trade in these ranging conditions? Because I found out that whenever it's ranging, I'm not that good at looking at price action unless we are trending in a situation like this. So with this, what we can see is the market that swept all the all-time highs. We rejected nicely, and this candle didn't confirm really a bearish engulfing candle. Then the next candle also dropped lower. Then you can see we had that nice rejection, but this candle closed below the low of that candle. So with this, we want to identify if the market is likely to go higher or lower. Where should the market head to? If you are going lower, we will be first targeting these previous week's low, and then later on we can target these fair value gap. But I don't want usually to have many markups in my chart, but I think the two of them will be ideal. So first, when I see the market, maybe if you're going lower, a sweep of that liquidity, so that will be my first drawn liquidity. Then later on we can expect to see a price deliver into this fair value gap, then push higher. Also, if I try to use the range or the fib tool, I have been getting it wrong, and I want to identify the challenges I'm facing. So from the low to the high, damn, okay, I need to ensure that my settings are right over here. So when I have all these ones put off, all these ones put off, I only need the 1 0 hours. So to me, I like to use these 7 9. I round it off, these to 6 2, rounding it off, putting it on, and 705, we don't really have it. Gonna have these, change it to 0.705, and I don't think whether I need the background. Don't actually need it. And let me also put off the figures, levels, and everything. Ensure that we are having black. All right, so these are the levels from to distinguish premium and discount. So from the high to the low of this swing low that pushed prices higher, we can see price. Let me also, my 50% is usually red, and then sure these other ones are black. Yeah, you can this is how I usually set my fib. Yeah, you can see that this is the 0.5 level. Price tapped into the 0.62. We were near to the 0.75, but we didn't really tap that. So the good thing is, if we can be bullish, then price is reacting off the discount levels. But currently we don't know that. Currently we are more of bearish until proven wrong, and we will identify how will we be proven wrong. So the good thing, price has already retraced into discount, although we have this deeper discount array over there, so we have known that. And now if the market will be going for these lows, what is my context area? Usually I have fair value gaps, I have immediate rebalances and fair value areas as my context areas. And as for these, we don't have any fair value gap of these. When we have, after the sweep of liquidity, price dropped, hasn't really confirmed a fair value area, also hasn't really confirmed a fair value gap. So what you only have is the immediate rebalance level. So over there we have that. What I usually, let me align it properly. There we go. So ensure also it's pink or purple. Yeah, let's use purple for these. Yeah, so that's the immediate rebalance level where I will, if the market stinging to hit it, how will we react? Will price start displacing with fair value gaps lower, or will price start displacing higher? If we start displacing higher, my first target will be this. Then later on we can expect to see how price will be reacting to these all-time highs. But for now, mainly I am very bearish because of the sweep of liquidity and the nice rejection and how we did close below that. And since we have that context area, we can drop onto the daily time frame and see what price has for us at around that point in time. And what we can see here, this is the weekly low. Nice, that's the weekly low. Also, this is the weekly fair value gap that we've seen, so don't forget about those specific levels because I won't be marking them. It usually takes time. And as of the daily, this is the weekly high, and as of the daily, what you can see is we have a daily fair value gap, which I think price, if we are bearish, should react into it, should also react into the immediate rebalance. They are overlapping nicely, so we have that. And I need also, I think it seems I had set everything to default. That's why we can see should be gray and not really deep. Yeah, that way hopefully. And yeah, so we have that daily fair value gap over there. Is this really gray? Okay. And should be light. Yeah, so we have the daily fair value gap overlapping with the immediate rebalance, which is now my context area if price should be going lower. Also, we have a daily fair value gap that currently should be respected. If we see price displacing above this candle, then we can be targeting this high because we have, or we will be trying to disrespect this fair value area at that point in time. So what we now do is wait for price to deliver into this specific level, and mainly watching the 4-hour time frame, seeing how price will react to that level, and then try to engage in price. So with that, because it was the weekend, right, it was on Friday, so what you can see is Sunday already printed out higher, and then we had this drop, created that immediate rebalance, and then we kind of rejected. So at this moment in time, we want to see, because we are mainly measuring, or from the higher time frame, we want to see lower prices of the daily fair value gap as well as the immediate rebalance. We want to see, do we really have displacements of this level so that we may target this level. If we fail to form displacements, then we can expect to see prices pushing higher. So with that, we play, and like whenever we are backtesting, it looks kind of easy. And before then, let's see the time zone. I like to use -5 UTC, -5. Yeah, that's what I want to use. Yes, so we're gonna see Sunday. This is Sunday because I usually use New York time. So we can see Sunday opened and pushed higher. You can see at the bottom here we have Sunday. Now as Monday will be opening, want to see how price will react, and we can engage either to this level or to this level. So play one more candle. We are dropping nicely what we want to see, but remember we want to see displacements with fair value gap, and we have also this fair value gap that was created at this point in time, but because we have this bearish context area, so somehow it can be disrespected to push prices towards that low until otherwise. And what do I call otherwise? If we will be bullish, then we need to see candle closing above these down close candles, as well as these daily fair value gap, as well as the immediate rebalance. If we see that, then this fair value gap has already been traded. What we'll be having is this liquidity to target the market. So as of now, we are seeing nice displacements, but also we need to see displacements with fair value gap. If we attempt to drop onto the 1 hour time frame, I'm pretty sure we're gonna be having some displacements, and with that reason, whenever we are in consolidation, it's it's not really ideal to drop onto the lower time frame if the higher time frame hasn't really confirmed anything. You can see we had that 1 hour fair value gap. We are dropping, creating change instead of deliveries, but you can see we are leaking a lot. So for that reason, I'm coming to learn that wait until the higher time frame has confirmed that, wait for displacements, then try to engage, other than maybe engaging blindly from the lower time frame, yet the higher time frame hasn't really confirmed. So with that, wait and see. Price started pushing back, right? We haven't really formed any fair value gap, which is not an ideal sign, right? Then the market drop lower. As this market drop lower, so now we want to identify a new context area of which we can be continuing lower. So with that, we identify this immediate rebalance, price now respecting the daily fair value gap and also the immediate rebalance. Now what we want to do is, or what I could have done is, engage in prices going lower, and the point I will be watching for will be these immediate rebalance zone. So I drop onto the 1 hour time frame. Now I've seen some displacement, but also what I'm saying is, as of the 4 hour time frame, all right, it's taking kind of time to bring us that, or okay, I think it's this point in time. All right, the market had already displaced, right, going lower, and what we can see is we have kind of disrespected these bearish fair value gap, right, and now we want to see expansions going lower towards this previous week's low. And the context area, as I've highlighted, we have that 1 hour immediate rebalance, the 4 hour immediate rebalance, since we actually haven't really formed a fair value gap. And at that point in time, we can see we have a fair value gap overlapping at this point in time. So in this scenario, what we do also is we wait for price to deliver into this area, then wait for now displacement going higher, this fair value gap to lead to another fair value gap, so that we engage. So with that, guys, I will be waiting. Price pushed higher, tapped into that 1 hour fair value gap. We didn't really tap into that immediate rebalance, which guys want to see if the next candle closes maybe below this point in time and forms another fair value gap. we can decide to engage. But if that doesn't happen, then we want to identify price to deliver to this immediate rebalance, then start displacing lower. But for now, let's wait for the next candle, which didn't really displace. We haven't really, this fair value gap hasn't really confirmed another fair value gap. So for now, we also wait. And then price has pushed higher. We are in close range to our context area, whereby we want us thing into it, then displace. We started ranging at that point in time, then price dropped. We haven't really tapped into that unless I didn't draw my, all right, should be at that low. We haven't really tapped, have we? Not really. Price hasn't really tapped into it. We can see price is dropping. Also, if now we want to go lower, we want to see price closing below this consecutive down close candle to create a change in state of delivery with fair value gaps. If we see that, then this fair value gap would have led to another fair value gap and we engage. So that didn't really actually happen. We are in this 1 hour fair value gap, and then price drop lower. We haven't really formed a fair value gap, or we haven't really closed below the consecutive down close candle. What you're seeing is maybe a drop, sweep liquidity, and we rejected, which is not ideal. Then the candle pushed higher, and I think at this moment in time, this candle Monday will be closing because it's around 22. So what happened? Price pushed back into this level whereby we are expecting a drop off, and then you can see how we displaced and see the next what happened is, as we tapped into that, we formed a bullish fair value gap, which is not really ideal if we are going lower. And somehow you can say we had price forming a bullish fair value gap at this point. This fair value gap has led to this formation of bullish fair value gap. So with that, since Monday is about as closed, we can go off to the daily time frame and see how did Monday actually print out. So Monday was a consolidation candle. We can see over here price didn't really react nicely off the daily immediate rebalance, so 50-50 price action. So what we need to see if the next candle will open and drop towards these lows, or maybe we would have already disrespect the fair value area and target those highs. So if we get some more clarity from the 4-hour time frame, some more clarity of the 4-hour time frame is the level that we were watching for displacements to drop off lower. That didn't happen. You can see we don't have any fair value gap, though price displaced heavily. We cannot say we should be looking for sells because there is no displacement with fair value gap. And I think that's where I'm getting it wrong. With these displacements, I usually tend to look for a trade going lower, but as this point in time, you can see it's not really ideal for us to look for a sell position because the market looks kind of reversing. So at this moment in time, it's a Monday, so want to see how the next 4-hour candle opens, because this one has formed a bullish engulfing candle. We have swept this previous candle's low and formed a closed above the opening and the closing price of the previous candle, which is this small candle. So we have a bullish engulfing candle that has been confirmed, which is a sign of bullish prices. So want to see how price reacts of these IR, the immediate rebalance. No fair value gap has been confirmed there, and for us to engage with price towards this high, then remember we need to see the candle closing above this down close candle with fair displacement with fair value gap, then we engage. But even though we are currently pushing higher, we want to see displacements going lower with fair value gap, but with fair value gaps. But what is happening right now is bullish, which we need maybe to be out until we are proven that the market isn't really heading lower. And with that, whenever you're watching the live markets, it's hard, right? The patience to wait for 4 hours for a candle to close is what personally I should maybe now work on, to ensure that I can wait for a candle to close to tell me I should act on, right? A good example was at this point in time when this candle printed lower. Personally, I could have maybe waited for a lower time frame. If we could have gone to the 15 minutes time frame, we could have gotten a trade, a displacement with fair value gap of this, and maybe taken a trade which could have ended up being a loser. So it's ideal to wait for the higher time frame to confirm the fair value gap itself, then try to engage. So at this moment in time, Monday has closed. Let's see how Tuesday opens up. Tuesday opens up, rallies higher. Now what we have the 4-hour fair value gap at that point in time. So we have the 4-hour fair value gap at that point in time. So what could really happen? We also have the immediate rebalance. Remember, sometimes price reacts off the immediate rebalance and fails to deliver into a fair value gap. All right, I need to have it at that. Yeah, so we have those two context areas. See how price will react to that, and then maybe we can see how we can engage if price also closes above these purple line that we've drawn, the weekly immediate rebalance. We will be disrespecting that. We'll also be disrespecting the fair value area, and we can engage in higher prices. So with that, we have displacement with fair value gap, and now what we are waiting is the lower time frame, which is the 1 hour time frame, possibly to confirm what we can expect. So these are the two levels. We play one candle, price has delivered into the IR. We have the fair value gap over here, overlapping also with another 1 hour fair value gap. We also have a fair value area that has been created, and whenever, if I will be engaging in bullish prices, I want to see candlesticks closing above these 2 3 down close candles. If we see a candle closing above, that's when I will try to look for buying opportunities going higher. But as of now, let's see whether price will be dropping to this and see the reaction. Then we have that candle closing above the 3 consecutive down close candles of the immediate rebalance. So with that, if I'm really aggressive, I want to see a fair value gap being confirmed. But if I'm really aggressive, I want to enter there immediately the candle closes. But where should my stops? I don't really know, because we have the fair value gap still open. So I want to see how the next candle will that lead to a fair value gap. You can see that didn't lead to a fair value gap, and that's why it's always good. I don't love to be conservative. I do love to be conservative other than being aggressive. You can see in this case scenario, price dropped sharply and back into the IR, and even though we are closed above that, it's always ideal to work with fair value gaps. Then price drop lower, staying into that fair value gap. This was around 6 a.m. So at around 5, that's why to me with gold London session isn't really ideal to me. So we stand into that 4-hour fair value gap. Let's see how price reacts. Then boom, price pushes higher. You can see now we have closed above these 2 down close consecutive candles of the fair value gap, and currently what we're seeing is price back into the fair value gap that we had already mitigated. So with that, want to see the next candle form a fair value gap, and I will enter off the next candle that didn't actually form a fair value gap. And how many candles have we printed? 1 2 3 4 2. So So we have that candle, the second candle of the 4-hour candle, because this candle 8 a.m candle will be closing at around 10 or 11. So the next candle didn't form a fair value gap, we dropped lower. We are currently in ranging conditions, which I think I personally should have maybe I could have gotten maybe entered immediately this candle opened and my stops below here. But you can see currently I could have been in deep drawdown, and that's why it's always ideal, just wait for a fair value gap to be confirmed. It's better the market to rally without you. It's better to miss than to lose a trade. So with that, wait for the next candle to see what it has for us. Boom. So if I had aggressively entered with this position, then I should have been taken off. So with that, I play one more candle, because now we are back into this 1 hour fair value gap. See the next candle. Boom. The market was kind of ranging in these conditions. You can see pushing higher, pushing back. And if you can go back to the 4-hour time frame to confirm what was happening, the same scenario I'm noticing also happened as of today. So what happened is, of the fair value gap, we had these two candle, how do we call them, two candle rejections. Yeah, because this candle tapped into that fair value gap, we rejected shallowly, but the next candle tapped into the fair value gap, swept the liquidities of that candle, then we displaced above. With this now price action, with this identifying that price is respecting these bullish fair value gaps, we have gotten a clear confirmations that the market isn't really bearish, but now we are shifting bullish, right? Because bullish fair value gaps are being formed and also respected, but also we didn't really have any bearish fair value gap. And with that, we can notice now the market had dropped, right? The market had dropped. If we can use our fib tool, so from the low to the high, so the market all dropped to discount, of which we pushed higher. So we think that now I'm favoring more of bullish, because also you can notice we are disrespecting these daily fair value gap with the immediate rebalance that had been traded into. So with that, the next target should be this fair value area, because price should be these fair value gaps, and the daily fair value gap should have displaced or done its job like a catapult to push prices towards this low, but that failed, and what you're seeing is the opposite, and we can now target these opposing liquidities, which are the daily fair value area that we talked about. So having that in mind, that the 4-hour fair value gap is being respected, and we have that nice displacement, we can go also aggressive at this point in time. Wait for this candle to close, enter a trade with the stops below this first swing low that has already been swept. But since we are conservative, let's wait for the next candle to trade. If we have a fair value gap, that's where we'll enter. I think it's during the London, right, Tuesday 11 a.m. then we had that fair value gap being confirmed, and at this moment in time, what I usually do, we can enter either of the fair value gap, right, or immediately this one closes, we can just continue pushing higher without prices tapping as in. So immediately it closes, see having a trade below the swing low that had been swept, and see whether we'll have a 1 to 2 So after the first target has been met, then remember we want to see these highs being the second target. So with that, we have that as our first trade of the week, which I think we have now displacements with fair value gap. We have this fair value gap that has been traded into, leading to formation of another fair value gap. So but this entry is really aggressive. A conservative one should maybe at this point to give us a good risk to reward. So the but sometimes with my data, what I notice is price doesn't always come into that fair value gap. Price tends to displace really fast. So let's see which scenario. All right, where are you? Over there. So let's see which scenario is really ideal. So in that fair value gap, sure that we have a 1 to 2, and this will give us a good one because our target will be within the range. So you see, consolidated a bit, we formed another fair value gap. Whenever we have these two fair value gaps, I always try to go with the higher one. So if I was conservative enough, didn't enter the first trade at that point in time, then if that is confirmed, then that's where I should enter. Then price didn't really tap into it, and yeah, then price actually dropped lower, didn't really even tap into that a fair value gap. And the all-time target was hit, and also this 1 to 2 was hit. So if we had actually entered at this moment in time, what could have happened is the trade wouldn't really have been ideal, or our limit couldn't have been triggered. But because it had closed, that's why usually after fair value gap has been confirmed, even if it will be in drawdown and no price might be rebalancing that fair value gap, tap into the fair value area engineered, and then price push higher. And what we can see is that played out nicely. But the main thing we are learning from these, and also you can see the higher time frame also was forming fair value gaps that were being respected. So at this point we entered the market with the next candle consolidated. We had us thing into it, this candle, then we then expanded higher, and I think our TP was met as of Wednesday, right? Our TP would have met, was met at around Wednesday, but for this trade wasn't really the entry wasn't triggered. But also at this moment in time, what could have been confirmed, we have a fair value gap, we have a clear change in state of delivery that has been confirmed because this candle closed above this consecutive down close candle, or this bearish candle, right? We had this candle closing below this one. I don't know, we had, yeah, something like this for presentation, yeah, I don't know, yeah. So we had this candle closing above this down close candle, confirming a change in state of delivery. This one also closed above this, confirming a change in state of delivery. So I think we could have also gotten another trade entry at this fair value gap with the stops, I think, below this down close candle. So if we see maybe a second trade we should have caught, maybe immediately the fair value gap was confirmed with the stops around that point with a 1 to 2. Yeah, would have been also a good trade, and that would have happened as of Tuesday 20 p.m. right? So timing also wasn't really ideal, but you can see price displaced nicely, tapped into the fair value gap and pushed higher. That I didn't see that, and so you can see with the first trade that we're talking about. And what we can learn of here is always wait for the higher time frame to confirm, right? If you have a scenario where you are expecting lower prices, have either you're waiting for fair value gaps to form, waiting for change in state of deliveries to form, not when you see displacement like this just to engage. I'm talking to myself, not to see that and then to engage. It's better to have confirmation. It's better to miss a trade, better to wait for 3 days and then take a clean setup, other than maybe getting involved, chopped off, which I'm currently doing, and that's what I need to stop doing. So that's what I'm learning of that. And what you can see also in this case scenario, what I can talk about is, as of Wednesday we opened, we formed that fair value gap. If we can talk of this fair value gap, assuming it's Tuesday, all right, or at that point in time we have the market pushing higher. So if we are looking for a trade setup, what could we be watching for at this moment in time? So we have a fair value gap has already been traded into. We have this fair value area that has been confirmed. We'll talk more about the fair value area from the lower time frame because it's not really clear of this moment in time. So if the market rallies to this level, then we can expect an expansion higher. But is it likely with this displacement, yet we have liquidities above this point in time? Not really. Can we expect a drop to that point, to that fair value area? Right, let's wait and see. All right, so we have this as the fair value area. We have price leg number 1, 2 and 3. So we have a fair value gap overlapping at this moment in time with this fair value area, but also we are having a 1 hour IR, which is also very key to watch right there. All right, so these will be the two levels I will be watching. This, how price reacts to this level, and how price reacts to this fair value gap. So we tapped into that. We didn't really have that rejection, so we wait for price to drop to this fair value gap, and then if we close above this down close candle, then we can expect a continuation going higher, which price did. We swept the candles low, never tapped into that fair value gap, and somehow we closed above that that bearish down close candle, which to me confirms a bullish change in state of delivery. But I'm not aggressive. Wanna see how the next candle prints. You can see next candle drop lower. If we could have entered aggressively at that moment in time, then I think we could be in a losing position, which is not really ideal. So we wait for maybe a sting into this fair value gap and then change in state of delivery. That didn't happen. We've seen price pushing. We consolidated a bit at that moment in time. So we have 4 candles. We can see the 4-hour time frame, what the 4-hour time frame has for us, and the big deal is waiting. Right? Backtesting looks easy, but whenever we are waiting, brother, it's not easy. It's not easy, but we need to develop that for us to be very profitable. So with this, we can see this candle did consolidate, and now we have a new fair value gap. So we're gonna get rid of that. Also this fair value area. Now our first context area will be this fair value gap. So we want to see price deliver to that fair value gap, and then see whether we can push higher of that fair value gap. If not, we can also monitor the immediate rebalance over here. So it's a thing also we shouldn't really forget. The immediate rebalance is really critical for my setup. Sometimes the market fails. A good one is if we can find one. Over here we formed this bearish fair value gap, but the market, what it did, it created the immediate rebalance, then pushed lower, formed another fair value gap, which was traded into, and price pushed lower. So situations like that happen. A good one is we have this fair value gap here. Market didn't rally into that fair value gap, created an immediate rebalance, dropped, created an immediate rebalance, dropped, created a fair value gap, traded, and then price dropped. In a bullish scenario, a good fair value gap is there, not traded into, but these candles upper wick and these candles lower wick overlapped and the market continued higher. We had these fair value gap not being traded into also. So to me, I usually watch also the immediate rebalance zones. So with that, 18. So I think it's ideal to wait for the higher time frame to confirm for you first, then maybe to get involved. So we have the 4-hour fair value gap at this point in time, also have the immediate rebalance at that moment in time. So if we see price drop into that and then expand higher, creating fair value gaps, then we can engage going higher and not expect maybe market to trade into this fair value gap, because it will be reacting off this context area. So we play one more candle, consolidated, but has already dropped into that immediate rebalance. Want to see this level, if the fair value gap will be traded into, dropped nicely. Then we consolidated at between the two levels, consolidated, then at around 8, the market expanded higher. You can see we closed above that moment in time. And how many candles are these? 1, 2. Before that, let's see the 4-hour. What the 4-hour was telling us. I know it's a consolidation. We have that consolidation. The market is failing to tap into these fair value gap, but what we're seeing is the market has already reacted to that immediate rebalance. And then, all right, so we had that. For us to engage, we need to see price breaking through all these down close candles and maybe above this high to create a bullish structure, which did happen at that moment in time. So if I can take back this candle, so with this candle, what you can see is we have created a change in state of delivery by closing above that, by reacting also above that immediate rebalance. Also, we are seeing that price has created a market structure shift by closing at that point in time. But is that really, if you're aggressive, you can enter there, but I'm trying to get off being aggressive and try to be conservative. So I'll wait for the next candle maybe to see how price will react off the immediate rebalance of it, of the 1-hour time frame. Damn. Okay, so I'll play back. That was so fast. All right, I need to put it under there. So what we can see is, with that, if I was aggressive at that moment in time, this trade would be in deep drawdown, which maybe will lead to fear of closing at a loss, right? Which is not really ideal. So it's better what we can see, market is currently at the immediate rebalance of the 4-hour and also the 1-hour. What we want to see, can we displace off this point, or could we maybe consolidate and then see price deliver to the fair value gap? We saw price back into the 4-hour fair value area, then immediate rebalance, not the fair value area, then price displaced, then we have created now a bullish change instead of delivery. Let's see if we'll have a fair value gap being formed. Now we have a fair value gap that has been confirmed. With the fair value gap being confirmed, and also we have this change instead of delivery, we can wait and see, because the market, there's a deep retracement, a fair value gap, which is a high probability to see the market sting into it and then reject. If it was a breakaway gap, or we have deep retracement or a consolidation candle, then I will mind maybe to take a position at that point in time. But because it's a deep retracement, we are seeing it's a bearish candle that confirmed the fair value gap. Want to see how price will react into that. And with this, most of the time I usually want to mark up these highs, the down close candle, and then drop to the 15 minutes time frame. But for now, we might maybe sting into it and expand bullishly going higher. This was the first candle that we played. So the 4-hour, we can check what is happening at that moment in time, because 4 1-hour candles have already printed. So this was all right. Oh, it let's see. No. So want to see at this point in time, before the expansion, this candle had closed above that high, right? I guess if we go back to the 1-hour, yeah, the 1-hour, I think that's the candle had already closed above this high, also closed above this change instead of delivery, confirming that. So we had confirmed that fair value gap. So to me, an ideal position, long position, would have been off this fair value gap, with my stops being maybe below these down close candles at that moment in time, because we have no clear lows at that point, or this swing low, the 1-hour swing low, and ensure I'm targeting a 1, 2, 2. And with that, if I can maybe pull that back, let's see where the trade where our SL is of the 4-hour time frame. Is it somewhere safe? So the 4-hour is below that 4-hour low, which is kind of ideal. So at this moment in time, after that has been confirmed, what we're having is a fair value area. Need to get rid of that. I want to have many markups. We have this fair value area at that moment in time, whereby price can maybe sting into, then we push higher. Also the 4-hour IR, we have the 4-hour IR. So somehow we shifted really quick, which is not as it should be, because I'm seeing all right. So at that moment in time, we had that candle confirm, we have that change instead of market structure shift. We have also fair value gaps that are being formed and the market is breaking through highs. So the next context area, the fair value gap or the IR, this is the IR. So our stops has given an allowance to the IR. Okay, okay, there we go. We have the IR. Then we can drop onto the 1 hour time frame where we had a fair value gap overlapping. Okay, then what you can see is the market tapped into that fair value area, the 4 hour fair value area. We formed a fair value gap. We have the 4 hour IR at this moment in time. Can we really sting it and we continue higher? We have a fair value gap overlapping, which I'm really thinking it should be. It is the one to push prices higher. Then we can see price dropping the fair value gap, sting into that immediate rebalance, and then price pushed higher. And finally, the first and the second trades were hit. So these are the ideal conditions to be trading in when the market has already confirmed, and it's always easy to trade in those conditions. But scenarios like these where you are or where you I drop onto the lower time frame and I see fair value gaps being formed and I try to engage, yet the higher time frame hasn't really confirmed them, is kind of low probability, which makes me make losses during the hard times and try to recover during the good times, other than waiting for maybe price to be clear for me and then engage, which this trade could have only taken less than 4 hours. And this one could be maybe long, but also an ideal position. Then if I first I play this, we can maybe have gotten another position going higher. We have that fair value gap, market traded into it, deeper into it. We have this fair value area at that moment in time. Would price react off that and push going higher? You can see price reacted into the fair value area. We pushed going higher, created a change in state of delivery. With that change in state of delivery, if one is aggressive and maybe if we go to the 1 hour time frame and try to observe the structure, is we are forming here bullish fair value gaps. So one thing I could have waited for is a fair value gap to be confirmed. Then at that moment in time, I could maybe take another position. This position, immediately it closes there with my stops below this prior swing low that had been taken, and then see whether I can have a 1 to 2. Yeah, at that moment in time, then see what the 1 hour did. Those fair value gaps are catered for. The stop loss, I think for this one, let's see what will happen so that it's a learning opportunity. The market sprang into this first fair value gap, then we rejected, and I think the next candle, if you are bullish, the next candle should be closing above these down close candles to go higher. We consolidated at that moment in time, which is not really ideal. Then we can see we're taken out at that moment in time. Then the market started displacing. So other than maybe going aggressive, because immediately the fair value gap was confirmed, I just went in aggressive. Maybe with this, wait for to wait and see how price reacts into the fair value gap, and if we close above that candle that maybe had tapped into the fair value gap, that's when you engage. But with this one also, Our stops were at this moment in time. We had a fair value gap overlapping with that. We were taken out. This trade was taken out. Would have been a loser. And then off that, if we go to the 4-hour time frame, see what happened. All right, with that, we didn't really form a fair value gap at that moment in time, that's why this event trade wasn't really ideal. What you could have wanted to see is a fair value gap lead to another fair value gap, this fair value gap to lead to another fair value gap to engage, but this trade ended up as a loser. Then price expanded. At this moment, we have confirmed a change in state of delivery, a clear one, and if maybe we wait for a fair value gap to be formed, then at that moment in time, one could take another position at that point. And where should be the stops? Stops should be considered off the 1-hour time frame. Now we have a 4-hour fair value gap that has been confirmed. Yes, we can trade into it, then we continue higher. Let's see the 1-hour time frame, what it has, and also the swing low. This is the swing low that we have, and the 4-hour fair value gap shouldn't really be aggressive. That's what I'm learning. So this is the 4-hour fair value gap. So wait and see how price reacts to that level, then try to engage, because now the market has we have confirmed a bullish change in state of delivery. We have that fair value gap and we have the target at that point in time. Let's wait and see what the 1-hour is actually doing. Could we sting into it, then displace higher? If we do that, then we can take a position. Inside the 1-hour, we have the 1-hour fair value gap. Below it, we have a 4-hour fair value gap. These down close candles. If the market reacts off this and then closes above that, then we can engage going higher. But for now, wait and see whether price will drop to the 4-hour fair value gap. Consolidates there. Then price pushed lower, right, to that 4-hour fair value gap. Then we confirm that change in state of delivery of the 4-hour time frame. So an ideal thing, wait for a fair value gap to be confirmed. Didn't really confirm that, but market dropped lower back into the 4-hour fair value gap. We did reject, which if you observe the lower time frame, the 15 minutes time frame, you could maybe identify a fair value gap with this rejection. Then boom, right? If you could have gone to the 15 minutes time frame, you can see this setup could have failed you again, but the 1-hour didn't confirm a fair value gap. Also, I think I could have gotten involved around because we were in close proximity to the target, and then we had that nice change in state of delivery. We didn't confirm a fair value gap, which is a thing I'm seeing now I should avoid really. And then what happened? Price tanked lower. If maybe I could have entered at that moment in time with my stop loss there, I would have taken out. Then the market rallied lower. If we go to the 4-hour time frame, so how can we avoid scenarios like this? Always waiting for fair value gaps to tell you what the market's intentions are. So if you go, this was on Friday, and I remember this price action clearly. And this Friday, the market, or that week, the market didn't really tap into those levels. But if we could have followed the plan, we could have had 2 positive trades, 1 to 2, and also another 1 to 2, which could have been at 4-hour week if everything was followed and adhered to. So that's how I wanna be trying to get the best out of the markets, just waiting for the higher time frame to confirm to me the real intentions, other than dropping onto the lower time frames minus the higher time frame confirming the intentions to avoid being ranged and chopped off. That's what I have for today. Hopefully you have learned, and if you have any query, feel free to let me know. And if you have any price action you want me to backtest, give me the date, give me the pair, but I want to specifically focus on gold. Give me the pair, give me also the date or the week we should backtest, and we can do it together. For now, bye bye.